Welcome back to All Things Money. I'm David Blain, and during this segment we're going to finish up talking a little bit about valuation update. We also have a question from our reader about our show last week where we talked about the coming tax increases that are on the horizon for January of 2011. As always, if you have any questions, feel free to give us a call, 633-0107. or email us at allthingsmoney@dlblain.com. And you can always visit us on the web at www.dlblain.com. There you'll see information about myself, the company, as well as archived copies of the show. So we're talking a little bit about the valuation of the U.S. stock market. Historically, when valuations are low, has been a great time to buy. If you're buying in the market at times of high valuations, your prospect for high returns in the future are not that great. So it's important to understand where you are in the market valuation cycle when you're talking about stock market investments. And so we were just mentioning that in the depths of the recession in March of 2009, that the S&P 500 PE had dropped down to somewhere around 12. It then shot up to 22 around January, February of this year, and since has subsequently declined to around 16.1 as of 8/31. And this is based on the past 42 years worth of data. And so this is one of my favorite charts, as I mentioned before. It's long enough time frame that you get a good portion of the business cycle, but not so long that you incorporate economic periods that are not maybe as applicable as today. Another one of my favorite valuation indicators is what we call the value line median appreciation percent. And value line, for those of you who don't know, is a company that produces statistical information on stocks. And one of the things that they do is they estimate a median appreciation potential. And so when you see very high median appreciation potential, it means that stocks are very low. When you see low appreciation potential, it means that stocks may be priced very high. And once again, you see a lot of the same story that in March of 2009, you had huge appreciation potential for most of the companies in the S&P 500. By January of 2010, most of this appreciation potential had been worked out of it, and stocks were no longer a bargain, and that today they're also, according to this indicator, somewhere around fair value. They're certainly not a bargain anymore, and so there's some reason to give pause to the valuations. Another thing that I like to look at and have updated you throughout the years on this is the crowd sentiment poll. We use the Ned Davis Research crowd sentiment poll, and they poll various institutional investors, individual investors, and they consolidate these sentiment polls into either a bullish or bearish outlook. And this is one where you want to go against the crowd, that when the majority of the crowd is very optimistic is when you want to be pessimistic, and when the majority of the crowd is pessimistic, you want to be optimistic. And so we see here that after reaching a low of 30% bullish back in 2009, rocketed up to about 71% bullish in earlier this year, and then dropped back down to about 40% bullish, which was actually a contrary sign that when only 40% of the market participants out there were bullish, was a good time to be buying. And so today we sit right about 47.3% bullish, which is slightly below the average, and so it's slightly bullish from a sentiment basis. From a valuation basis, we're neutral. From a market action basis, the market has been somewhat positive the last week or so. But as I've been mentioning for the past several months, the market is in this up and down type phase. I don't think you're going to see any tremendous gains. At the same time, I don't think you're going to see any tremendous downdrafts in the market like we had in 2008. So now to our question from our reader or our listener. They were talking about the I wanted an update on what I felt was going to happen with these tax increases. As we mentioned last week, the most sweeping tax cuts in a generation are going to expire in January. And of course, our Congress has done nothing. And so by doing nothing, they will automatically expire in January. Some of the workers at every level will see an increase in their taxes if these tax cuts are allowed to expire. Just a little highlight, it's estimated someone making between $40,000 and $50,000 a year would get hit with an average of $923 increase. Someone making between $50,000 and $75,000 would get an increase of around $1,126. President Obama wants to make the tax cuts permanent on lower income people and let them expire on individuals making more than $200,000 or married couples making more than $250,000. Republicans, on the other hand, of course, want to make all the tax cuts permanent. And what really makes me laugh is when you hear that, of course, I advocate for lower taxes, is they say, oh, well, that's going to add $4 trillion to the national debt if we allow these tax cuts to expire. And my answer to that is simply no. What adds to the national debt is spending more money than you have. Letting people keep their own money does not add to the national debt. The national debt is expanded from people in Washington spending more money than they have. It really annoys me when I hear that type of argument. But my take on this is going to be really hard in an election year for the Democrats and Republicans not to at least enact a one-year extension of these tax benefits when they come back in session. Maybe they'll let them expire for the people making over $250,000. Maybe they won't, but for political purposes, I would think that they would enact a one-year extension on these tax credits. Once again, I don't have any inside information on that, but just knowing that politicians are politicians, it wouldn't surprise me if they went ahead with a one-year extension on that. So that's a difficult question to answer. If you have questions on what exactly the tax increases are and all the details of that, go back and listen to last week's show on the website, www.dlblain.com. Stay tuned to this show. We'll update you as soon as we know anything. If we hear anything about tax cuts that are going to be continued or to let expire, we'll be sure to let you know. Well, that's all the time we have for today's show. For All Things Money, I'm David Blain. Hope you enjoyed the show, and we'll see you again next week.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.